start with what Twilio actually is. It has always been the company that sells messaging and voice APIs, the verification codes and phone calls inside your apps. The plumbing underneath is Twilio. This quarter, it wants you to believe it is becoming something else, the infrastructure for AI voice agents. First, the numbers. Revenue this quarter was $1.5 billion, up 22% year over year, with organic growth of 17%. Growth is reaccelerating, and that is the hardest fact in this report. More important is profitability. GAAP income from operations was $85 million, up 129%. Non-GAAP income from operations was $285 million, a 19% margin. Free cash flow was $353 million. A company that used to burn cash now generates it steadily. What this report really wants to talk about is AI. On the call, management mentioned AI 131 times. In product terms, it comes down to two things. One is called ConversationRelay. The other is Agent Connect. In plain language, they let customers build AI voice service agents directly on Twilio. Twilio used to connect the call for you. Now it wants to help you replace the person who answers that call with an AI. On top of the pipes, a layer of AI applications is growing. The existing customer base is warming up too. The dollar-based net expansion rate is back to 116%, meaning existing customers are spending more on Twilio. Management was candid, though. Part of that came from carrier pass-through fees they raised, not purely from real usage growth. The clearest sign of management's confidence is the guidance. They raised the full-year organic revenue growth range from 9.5 to 10.5%, all the way up to 13 to 13.5%. They also raised the full-year operating income and free cash flow guidance. But there is one number in this report that needs cold water. GAAP net income was $1.07 billion, and diluted EPS was $6.68. At first glance, that looks stunning. Do not read it as operating strength. Where it comes from is a one-time release of a deferred-tax asset valuation allowance. In plain terms, Twilio took tax deductions it previously could not use because of past losses, re-recognized them as an asset, and booked it into profit all at once. That is an accounting move, not cash earned from the core business. The number that reflects the core business is non-GAAP EPS of $1.47. The analysts pressed on essentially one thing. When does AI turn into real money? Citi, Morgan Stanley, JP Morgan, and William Blair all pushed on how much revenue the AI voice agent products actually contribute and whether it is durable. The story is good. The market wants to see it land in the financials. Management gave guidance. Third quarter revenue of $1.505 to $1.515 billion. Full-year operating income and free cash flow both raised to $1.135 to $1.155 billion. 3 months from now, the third quarter is the next test. Watch 3 things. First, whether AI voice agents turn into measurable revenue. Second, whether that sharply raised organic growth rate actually materializes. Third, whether this round of margin and cash flow improvement is durable rather than propped up by one-time items. Get those 3 clear, and Twilio's shift from communications pipes to an AI agent platform is finally validated.